All right, welcome. So, you've been curious about trading, but you want to make sure you start things off the right way, safely. Well, you've come to the right place. We're about to break down the absolute basics. Let's jump right in.
So, trading is on your mind. I get it. You've probably seen all the hype online, the fancy cars, people working from a laptop on the beach. But you're smart. And you're probably asking yourself, okay, what's the catch? Because you know there's got to be more to it than that.
And you are absolutely right. This slide nails it. On one side, you have the fantasy, the whole get rich quick dream. But on the other side, well, that's the reality. Success in trading isn't about getting lucky. It's about studying charts, having serious discipline, and most importantly, managing your risk. That right there is the real secret.
Okay, so let's just cut through all the noise for a second. Let's start with a really simple, basic understanding of what we're even talking about here. When you boil it all down, trading is just this. You're buying or selling something, like a stock or a crypto coin, and you're trying to make a profit when its price moves. You might buy something hoping the price goes up, or you might bet that it's going to go down. Either way, the whole game is about profiting from those price swings. Simple as that.
Now, there are a lot of different playgrounds you can trade in. You've got stocks, foreign currencies, crypto, you name it. But look at that pro tip at the bottom because this is huge. Don't try to learn all of them at once. Just pick one. Seriously, whether it's stocks or crypto, just focus on that one market and really get to know it inside and out.
Okay, so like any field, trading has its own lingo. But don't worry, you don't need to memorize a dictionary. There are really just three key terms you absolutely have to know to find your way around. First up is volatility. This is basically just a fancy word for how wild an asset's price swings are. Something with high volatility, like a lot of cryptocurrencies, can have these massive price jumps, both up and down. Now, that means you could make bigger profits, but, and this is the important part, it also means you could have much bigger losses. It's really just a measure of risk. Next up is your new best friend, the stop loss. Think of this like the eject button in a fighter jet. It's an order you set up ahead of time to automatically sell what you're holding if the price drops to a specific point. This is what stops a small, manageable loss from turning into a total disaster. It is your number one safety net, non-negotiable.
And number three is the risk-reward ratio. This is how the pros think. Before they even think about making a trade, they ask themselves, okay, how much could I lose here versus how much could I possibly make? A really common goal is a 1-to-2 ratio. That means you only take trades where you could potentially make at least double what you're risking. This simple piece of math is what keeps good traders in the game for the long haul. All right, let's talk strategy, but we're going to flip the usual script here. See, most beginners are obsessed with how to make money. We're going to start with how not to lose it. Because trust me, that's the part that really, truly matters.
I need you to pay really close attention to this next part. I'm serious. If you only remember one single thing from this entire explainer, make it this. This is probably the most important rule in all of trading. 1%. That's it. That's the rule. This means you should never, ever risk more than 1% of your total trading account on any single trade. So if you have $1,000 to trade with, no single trade should risk more than 10 bucks. Why? Because this rule is what keeps you alive. It's what will save your account from getting wiped out by just a couple of bad trades. And this quote just says it all, doesn't it? As a new trader, your number one job isn't to hit a home run. It's to protect the money you've got. Staying in this game is all about playing great defense, not just trying to have a flashy offense. Okay, so with that risk-first mindset, here's a dead simple strategy. First, find an obvious trend. Is the price generally going up? Second, wait for the price to dip a little, back to a solid entry point. Third, the second you're in, you set that stop loss right below that entry point. And fourth, you aim for a profit that's at least twice what you're risking. See? It's a simple, disciplined process you can repeat over and over. So you could have the best strategy on the planet, but if you can't control what's going on up here, in your own head, none of it matters. This is the final boss of trading, that constant battle between your own fear and greed. Your emotions are your biggest enemy in this game. Greed will tell you to let a winning trade run way too long, and fear will make you panic and sell at the worst possible moment. You have to learn to accept that losses are just a cost of doing business. They're gonna happen. That means no revenge trading, trying to win back what you just lost. The real goal isn't some massive win. It's just being patient and disciplined enough to get small, consistent gains. Okay, so how do you actually put all of this together? Don't worry, I've got you covered. Here is a super simple, step-by-step roadmap for your first 30 days.
Are you noticing a pattern here? For the entire first month, making money isn't even the focus. Week 1 is just studying, no trading. Week 2, you start practicing, but with fake money in a demo account. Week 3, you're still using fake money, but you're laser focused on that 1% risk rule. It's only in week 4 that you step back and review what you've learned. You have to learn to walk before you even think about running. So here's the bottom line. If you come at trading like it's some get-rich-quick scheme, I can almost guarantee you're going to lose. But if you approach it like a skill, one that takes study and practice and a ton of discipline, then you actually give yourself a fighting chance. So the real question isn't, are you ready to make money? It's, are you ready to learn?